Am I up? Hey, test, test, test. Test, test. Mike, my man, can you hear me? Okay. So you're just going to switch it over to public or whatever at 12 o'clock? Oh, that's not what I want to see. Okay, that's what I want to see. Alright, if anybody is here yet, we're going to be starting at 12 o'clock. We're going to crush this one today. Market is too crazy right now, even at 12 o'clock. Should at least get like the Jeopardy waiting music on in the background or something right now. Waiting for 12 o'clock, got about a minute and a half, and we're going to get rolling. All right, 12 o'clock. Let's do it. Jumping right in. Markets are wild today. All right, so I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. Trading is risky. You should carefully consider whether trading is suitable for you in light of your own financial condition. Got some positions on. Actually trading really actively today. Really busy. Market's pretty crazy. We'll talk about that in a minute when we go to the charts. But these are my current positions, which I am required to disclose as a professional regulated trader. Briefly about me. feel like everyone knows who I am by now, but I have been with T3, I think since 2010. I think that's a typo there. So I've been with the firm for like 10 years now. I've mentored well in excess of 100 traders for the firm. Currently managing a group of, somewhat probably significantly over 50 traders. Love what I do for the most part. Love trading, love markets, love T3. Great company, been here for a long time. Always been really happy with the firm and kind of how the business is structured. So today I'm going to be talking about charts. I'm going to be talking about a couple lessons from my own trading from last week. After that, I'm going to talk a little bit about proprietary trading in general and potentially joining T3 in one way or another. We have professional proprietary trading accounts. We have retail trading accounts. We also got some great stuff going on at T3 Live. So if you have any interest in any of that stuff, reach out to me at my email address here below. And then either myself or a member of my team will get back to you with information. Oh, and I am also running the Pro Trader Bootcamp this summer. Click below the video for more details. That's going off here at the end of June. So great way to run into 4th of July weekend is to take the Pro Trader Bootcamp. Basically what I'm doing is going over the lessons that I teach to my professional traders that you can get exposure to for the first time. This is the first time I am ever giving out some of my trading ideas, how I look at markets, how I trade, to people who are non-professionals. So you're going to get exposure to my professional training program classes in real time through the Pro Trader Bootcamp. All right, let's do it. Let's go to the charts. See where we're at now. Market's been real crazy. Okay, looks like SPY is working its way back towards that 314 right now as we're having our webinar today. Market's been on a wild ride. I mean, we spent a lot of time talking about this rally here in the second half of May that I felt was into the beginning of June that I felt was a really unhealthy rally because we could see that it was primarily short squeezing. So that's not what you want to see in a healthy bull market, not just shorts getting squeezed. You want to see new money coming into the marketplace. That culminated with this island top that led to a phenomenal trade down here. I think I spoke about that last week. And then since then, we've been chopping around a bit. There was an unbelievable retail sales number that came out on this day, June 16th, that brought us up. And what I've been looking at now, so right now I'm short. I'm net short the market still. I'm not as heavy, I don't think, as I was when I was capturing this kind of island top, move into this blow off top here. But I've got, some size on. And this day we had that great retail number come out. And pre-market we were as high as 317. That's from the VTF room. So pre-market we were as high as 317 that day. So I am very broadly right now looking at the range between this high, the pre-market high that day, and the gap fill, which goes up to about 318 as market resistance. While we're below that, I'm going to continue to be net short. If the market's able to get back above that, then I'll look to flip. And very particularly, I am trying to be net short relative weakness. And I'm a little concerned. Today and yesterday, I'm a little bit concerned. Why? Because look at the NASDAQ. All-time highs in the NASDAQ. Look at Apple. All-time highs in Apple. Microsoft. All-time highs in Microsoft. Facebook. All-time highs in Facebook. Amazon. All-time highs in Amazon. How are you going to be short this market, Derek, when you got the NASDAQ and Apple and friends making all-time highs every day? That's the question, right? And I'll tell you what, it's not easy. But the S&P is not at all-time highs, and the IWM, which is really where a lot of my short is located right now, is even weaker. So I want to be short relative weakness. My concern that's really picked up over the course of these last couple of days is that we're seeing new money rotate into tech. New money coming into the market is without a doubt bullish. And there's no way that I'm really going to see any downside follow-through on my shorts, even in those relatively weak names, relatively weak sectors, and weaker indices, if there's just new money rotating into the biggest market cap stocks that are out there. And obviously the indices, the S&P is market weighted. So the fact that Apple's at 268.30 right now and the SPYs are only at 313.85, and they're still pretty far away from this high, let alone all-time highs in the SPYs. It just shows you it's, we don't even call it like the NASDAQ anymore, or even the S&P. It's the Apple and Friends Index. The Apple and Friends Index, it's so strong, money's getting rotated into it, and I'm not going to be able to see a breakdown here in the SPYs, even as I'm short, as long as tech remains this strong. But why is the S&P not at all-time highs if Apple's at all-time highs? It's because there are stocks, there are sectors that are relatively weak, right? What do we know is weak? Well, banks have been weak, right? Look, Bank of America. What's going on in Bank of America today? Nothing. It tried to be strong in the morning, rolled over. JP Morgan, nothing going on. Your cruises, your airlines, we can look at cruises too. American Airlines, smoked on a secondary offering. Secondary offerings at $13.50. The other airlines, not looking healthy. UAL looking like it's breaking down out of a wedge pattern. Cruises, CCL, not looking good. Oil names, Exxon, nothing going on here. Chevron, nothing going on here, right? Occidental, maybe a little bit better. It's developed kind of a nice wedge here, but nothing going on. So one of the things I wanted to talk about today, kind of the lesson of the day, is based off of a mistake that I made last week in trading. And guess what? I'm a professional trader. I make mistakes all the time. I'm wrong all the time. And I think if you speak to anyone, person who says that they've been a professional trader for a decade, trading guru, I hate that term, or whatever, and they say that everything that they touch, they're like Midas, turns to gold, and they're always right, and that their timing is always perfect, you should run the other way. That person is lying to you. Successful traders make mistakes. It's how they manage risk. That's the difference. So I came in on this day in the morning, June 18th, Thursday last week, and I was feeling bearish, and I probably shouldn't have been. I knew that I probably should have been waiting until this week to press my shorts, because on Friday of last week we had that historic options expiration that occurred. That was probably going to keep the market a little bit tighter, and now maybe this week it could get a little bit looser. And on top of that, my gap analysis. On Thursday of last week, we were having a common gap to the downside. So I've been spending a lot of time talking about my traders about gaps lately. I love gaps. I love trading the open. Why do I love trading the open? Because I have a gap to contend with. The gap provides me so much extra advantage from the information. Right? What's the information? I understand what type of gap I'm dealing with, and what I'm really trying to assess is how is this gap affecting the participants who are in the marketplace at any point in time. Right? That's what you're really trying to figure out when you're looking at the market, period. How does this market move? How does this gap? How does it affect the participants who are in the marketplace? I knew that the market having a common gap to the downside on Thursday meant that I should be patient on shorts, potentially aggressive on longs if there's anything that I like out there. And then after maybe the market, moves sideways for a while in the beginning of the day or bounces up a little bit, then I can come in and I can press my shorts. Guess what? I jumped the gun. Totally jumped the gun. I was hitting CCL short right at the open. I was hitting Oxy short right at the open. Hit a couple other things short right at the open. CCL and Oxy kind of being the main culprits here. And guess what? Here's Thursday's candle, right? We could probably find these things on our 15-minute chart. Let me find it. 15-minute chart from Thursday. That's this day right here. Look at that. Look at that beautiful green Maribozu candle, followed by a brief rest, followed by another beautiful green Maribozu candle. Up, up, up. Guess what? I shorted pre-market and right at the open. CCL. Thursday, same thing. I was too aggressive on these shorts right at the open. Almost could have done damage to myself. Beautiful first green bar here, and I'm short. And guess what? Even though I initially lost money in both of these names, I ended up making money in both of them. Even being short right at the open. And I didn't make a lot. I probably, didn't make enough to justify the risk that I put on in the trade, but I was able to manage the positions well enough to keep myself from taking losses as I jumped the gun and shorted too early into a common gap to the downside and these stocks moved higher in my face. Well, how did I do that? Trading is all about position management and risk management. I tell my traders all the time, probably 80 to 85% of what you should be doing as a trader is risk management. 15 to 20% is about maximizing reward. Making money, honestly, is the easy part. You buy the stock, it goes up. How hard is that? Show me what happens when you buy the stock and it goes down. That's what separates the pro, the excellent high-level trader from the amateur who, you know, it's okay to be an amateur. Everybody starts as an amateur, right? It's how you learn. But it's risk management. That's what really separates the pros from the amateurs. So how did I not lose my shirt? Well, I trade with outs, right? I have stop losses in place. So, you know, I took this initial trade here in Oxy, and I think I got stopped out of the majority of my position. Usually what I'll do, you know, and I knew once I was in and once it was running against me, I was just too early. You know, my idea is still potentially intact, right? What's my idea? Again, let's take a half step back. Everything I do starts with the big picture and works its way down to the small picture, even if it's just a day trade. So if I want to be short Oxy and I want to be short CCL, first of all, I better know what the SPYs look like on the big picture, right? SPYs, Thursday, that's this day right here. SPYs having a common gap to the downside, so I should be cautious again about shorts, but still beneath that resistance that I talked about. So I know that while the market, I already said this in the beginning, because this is how I'm still positioned, while the market is below this 315.50 to 318 range, I know that I want to be leaning more towards the short side than the long side until the market proves me wrong. And maybe it does prove me wrong. That's what happens in trading. And again, it's all about position management. My favorite thing is when I'm wrong and I lose no money. I almost like that more than making money. Almost. There's nothing I love more than making money. But I almost like being wrong and losing no money more than I like making money. Why? Because that's hard to do. How are you going to be wrong and not lose money? By having excellent position management and excellent risk management. So again, you know, kind of going back to these trades here where I jumped the gun, well, guess what? You know, I was probably pretty heavy, got stopped out of stock. You know, I think that when they overshot the gap fill into the moving average area here, that I reshorted some for a scalp. Then I got stopped out of that again. The whole time I kept, I think, a smaller core position. I like to keep that smaller core position. You know, for me, if it's a small position, I could really let it run against me for a while, and it's keeping me focused on the actual market. But I can't be heavy. I can't be max tier size here at 1880 and be able to hold it for this move up to 20 quarter and be good. I can't, right? But I can, you know, short, heavy, get stopped out, keep a feeler, short, heavy, maybe make a little profit in this downtick, get stopped out, keep a feeler, and then look for the way to be able to re-enter. Honestly, this turned into a 2-day trade for me, Oxy and CCL. I was able to make some money back here into the close and this little bit of a down move. And then I kept small overnight. And I remember 4 o'clock coming around going, you know what, I think we're going to gap up tomorrow. I think that might have been a mistake also. Sometimes, and I think, you know, this is I'm probably not the only one who makes this mistake. And I'm happy, by the way, to talk about my mistakes. I want everyone to learn from my mistakes. You know, sometimes we let our ideas get in front of what the market is actually telling us. I have this idea that Oxy and CCL and the weak name should be going down. But the technicals aren't confirming that idea. But even with that, you know, by having good risk management, position management, I'm able to take advantage of it. So guess what? I kept a small position here. Big gap up the next day. Like, okay. But now this is really different, right? This gap is the opposite of this gap. This was a common gap to the downside. They tend to get filled. This is a common gap to the upside. They also tend to get filled. So now, Sure, I'm down money right at the open because I kept a smaller position overnight. I finished down in the name the previous day. But I was able to add heavily at the open here to be able to capture this initial move to the downside, cover a lot of that stock. And I'm sure, we got a 15-minute chart up. If I look at a 5-minute chart, this probably corrects right down to the equilibrium area. What's the equilibrium area? It's a space between the 8 and 21 EMA. Let's see if we can find it. That's this day right here. Yep, that's exactly what happens. Down, little price consolidation here. 8 EMA starts catching up. Stock tries to make another leg higher. That's exactly what happens. And then the volume here was my signal. This volume right here on the 5-minute chart. So same thing, shorted right off the open, covered a bunch. Probably got stopped out of some stock. And then this volume comes in right here, and I go, okay, this looks like upside capitulation to me. When this volume is really starting to increase like that. And then we get this little topping candle that comes in, bam, get heavy again. And then finally, after having multiple trades, many trades over the course of that previous day and that morning, trades that were either break-even trades or losers, sticking with it, having that feeler, finding that right spot, getting that trade on, catch this whole move down, ended up closing my position by the close that day, and finally was able to have some real follow-through in the name and make money for myself. CCL, similar but different, right? Same situation, right at the open that day, ripping up in my face, getting stopped out. I remember when it got into this moving average area and it got up to 19. I remember it, this high is 1908. I remember shorting some 1906s there as part of a scalp trade after, getting stopped out of the initial trade, but still keeping the feeler on. Covering some here into this down move, but keeping some, getting stopped out again. And then same thing, working that trade, keeping that feeler on. The next signal came in, I was able to make some money on it. Next day, kept a feeler, knew it might have been a mistake, market gapped up, shorted into the common gap, understanding gap analysis. And then CCL finally showed its relative weakness and traded down all day. Biggest mistake I probably made was actually exiting the CCL by the end of the day today and not keep it, that day and not keeping it for these next couple days of trading price action. The CCL, these names, they don't look good to me. Oxy, CCL, American, the names that are weak don't look healthy right now in this market. So what's going to happen to the weak names in the event that the market itself actually breaks down? Well, they could potentially get hit hardest. That's what I'm looking for. But even though right now the market's beneath that resistance and I want to stay short, there's no guarantee that that's going to happen because I got this monster in my face. The Apple monster. And new money's getting rotated in. Hedge funds are buying. Hedge funds are chasing performance. And that's going to hold up. Honestly, Apple is such a large part of the S&P. Microsoft is such a large part of the S&P that the moves in these names are more than enough to keep the SPYs from going down. And honestly, the amazing thing, I'm surprised that the market's not higher, that the S&P is not higher. I'm surprised I'm not getting stopped out of all the shorts I have right now. Why? Because again, look at this. Look at this Apple. It's really incredible. So that's kind of the general thought process and everything. With the lesson that I want from everyone to draw from today is really, again, big picture down to small picture, right? Always having research and information that can have you develop your thesis. And then position and risk management. You have good position management. You can be wrong. I was wrong in CCL and Oxy when I came in and I shorted those days. Totally, I couldn't have been more wrong. And I made mistakes that day. Totally came in, jumped the gun to the short side. I ignored what I know about common gaps. And I was able to rectify those mistakes by having good risk management, good position management, good money management. And I was able to, end up making money. So that's it. That's really the lesson I want guys to draw from today. Let's go back to our PowerPoint here. Let's talk about T3 a little bit more. Let's talk about prop trading with T3 Trading Group. So T3 Trading Group is one of the largest prop trading firms in the United States. We have over 500 licensed professional trading accounts. We've got our headquarter office is in Manhattan, which is typically where I'm working as long as we're not in the middle of a global pandemic. We got a second smaller office in Manhattan as well, 2 offices in New Jersey, office in Atlanta, office in Boca Raton, and even before the virus, more than 50% of our traders were remote traders. So it was actually really seamless for us to get everybody out of the offices and get them remote, which is great. And we're using the virtual trading floor like we've never used before. Pro Desk Room is where it's at. The Pro Desk Room has been on fire lately. It's not just me. It's definitely not just me. It's the team. The team in the Pro Desk Room, we got great guys in there. And if any of them are listening to the podcast, you guys know who you are. Patrick, Felipe, Brant, Rowan, a whole bunch of others. I hope I didn't miss anybody who might be watching, because I appreciate all the strong contributors in that Pro Desk Room. They're making all my professional traders money. They're making my retail traders money. They're making the Pro Desk money, and I love to see it. If you want to trade professionally with us, keep in mind that T3 Trading Group is an SEC FINRA registered broker-dealer. All of our traders have to become professionally licensed. You don't have to pass licensing to open up retail accounts. We have retail accounts as well. The retail accounts are excellent. You get direct market access. We don't sell your orders out to anybody. E-Trade, TD, Schwab, Robinhood. Go down the list. They're all selling your orders out to HFT firms. It costs you a lot of money. Look up their SEC Rule 606 report where they're required to disclose it. You can just Google Schwab SEC Rule 606 report or TD or whoever. So you got to pass to trade professionally. You have to pass the SIE exam and the Series 57. We will sponsor, we'll provide study materials. You're going to get a full suite of study materials from STC, textbook, online classes, online practice tests, and then you do got to put in some real study and learn the rules and regulations in order to become a professional trader. Once you pass the tests, time to trade. That's what everybody wants, right? We have 4 different software options available to our professional traders: Lightspeed, Fusion, Sterling, and Wolverine, or WEX. On the retail side, we only have Sterling Trader Pro and Fusion. Typically what I do when someone first switches over to a professional account with us, passes the exams, start you on the demo for a week or 2, get used to the software, then we'll switch you over to the live account. We have equities trading, we have equity options trading, we have futures trading as well. I personally really run business development for the equity side of our business. But if you have interest in futures, reach out to me. I'll set you up with Jared Plutzer, great guy who runs our futures trading division. Training. Training is the key, I think, especially when you're new in the business. You're either going to try to go it your own way, which is going to be a painful process, or you can get a jump start by having good mentoring and training. And that's honestly, as far as my group, I started working with traders and having my own trading desk in 2013. It was me and a couple people. Now I'm working with like 70, 80 professional traders on a day-to-day basis, somewhere in that range. I didn't go from having 2 people to having this many people by giving people trading software, some money, and a computer and saying good luck. I put together a lot for the training and development of the traders that I work with. We have a morning meeting pre-market every day. We have an afternoon meeting post-market every day. There's training programs when you first get started. There's mentoring available. Everyone gets, if you're a professional trader with me, you get free access to my virtual trading floor room, which I was already talking about. We're doing such a great job with that VTF room, broadcasting the morning meeting, broadcasting the afternoon meeting, getting the news in there in real time, large option order flow in there in real time. And if you can't tell, I'm an open book with my own trading. I mean, today I got on here with you guys to talk about my mistakes. I talk about my mistakes. I talk about the things that I do well. I am happy to help traders, take their trading to the next level. There's nothing I love more than taking someone who has really never traded before. If you're already experienced, that's great too. But when I take someone who is like so green and I turn them into a trader where now it's reached the point where they're making me money off of their ideas that they're presenting during the trading day in the VTF room and in the morning meeting. There's nothing I love more than that. And again, it's become a really strong team there in the pro desk. So you're going to get access to all that by opening up either a prop account or a retail account with us. You will be required to post capital, risk capital, in order to trade professionally with us. And then what we typically do on our end is we start by providing buying power at a multiple to your capital contribution. So usually something like 20 times for intraday trading and 8 times for overnight. So someone who deposits $50,000 with the firm will start by allocating $1 million to work with. And some people will start really small, especially if you're very entry level. You can contribute a smaller number like $10,000, and it's not unusual for bigger experienced traders to contribute 7 figures, because they want access to real money, because they're looking to really leverage their experience to become as successful as possible. Again, we provide the training for the licensing exams, all the education that I was just talking about, and you're going to get paid based on a profit split, which again I'm happy to talk about with anybody individually if they're interested in moving forward. Yeah, and on the prop side, T3 is one of the biggest, if not the biggest, from a capitalization perspective, prop trading company that's out there. So we're really able to handle all levels of business. I have no problem working with newbie traders who are just getting started, but I love working with the experienced guys also. So if you're experienced in the industry, reach out. This is a great place for you to be around other like-minded experienced traders and have a great community and have same thing, have all these ideas getting bounced off of you. And there's a bunch of other perks. Like I said, you're going to get the Pro Desk room. You're going to get Scott Ruther's VTF room as well, Trader Hub, the Red Dog. You're going to get regular all access. Scott is the Chief Strategic Officer at T3 Live. Great guy, phenomenal trader, really well known. I'm sure if you know me, you know Scott. I've learned a lot from him over the course of my career. So you're going to get access to basically myself, and you get access to Scott for free when you open up an account with us. So there's a tremendous amount of value there. And that's in addition, even if you didn't get any of this stuff. I don't know why you'd want to have a retail account if you trade actively with any of the, quote-unquote commission-free online brokers, when you could have a retail account with us where you have direct market access at a very low commission cost. It's just, if you're trading actively, you're just getting robbed by the HFT firms at those commission-free companies. It's different if you're an investor. I tell my friends who, have full-time 9-to-5 jobs, they, buy a stock here or there a few times a quarter. For them, being with someone that's keep your costs as low as possible. You don't need professional trading software to invest. It doesn't matter if the HFTs are costing you like $10 to $20 per 1,000 shares that you trade. If you just put 1 or 2 trades on, those platforms are great for people who have full-time jobs, can't trade actively or professionally, and want to invest. But if you're trading actively in any way, I think you're doing yourself a disservice by working with them, and I'm happy to talk about that as well as almost anything else if anybody wants to reach out to me. Oh, and again, the boot camp. I really want people to sign up for this because I hope that we're able to make it worth it. I'm going to be giving up a lot of my time during that week to give live classes and live training sessions. And guess what? Right now when I'm doing this webinar and when I'm doing the boot camp classes, you know what I'm not doing? I'm not making money from trading. And I don't know how much it cost me, but particularly today, because I've been trading very actively, I can promise that doing this webinar today cost me some money. So I appreciate you guys being here, and the boot camp's going to be awesome. So sign up. And then finally, if you're interested in any of the things that I spoke about today, trading professionally, opening up a retail account with direct market access, any of the T3 Live stuff, the VTF room, reach out to me. I'll either then contact you directly, or I'll have a member of my team at T3 Trading Group if it's T3 Trading Group related, or a member of the T3 Live team if it's T3 Live related, get in touch with you to discuss everything that we have here. And I think that is going to conclude the webinar for today. Does anyone have any questions? We're doing this YouTube format here, so I think that you can post. I think that you can post any questions that you have into the chat, and happy to answer questions. Also happy to jump back to my trading. Happy to answer questions about the market, about the positions I talked about risk management, about any of the programs that we have here. The training program that I give to my professional traders basically consists of a series of lectures. I start with basics of technical analysis, understanding support resistance theory, things like that. But then pretty quickly get more advanced into game planning, tape reading and routing, market psychology, how to trade IPOs and secondaries. So the idea behind the training classes that I give, which is also going to be within the boot camp, is to give people a real solid foundation. You're not going to take my training program or take a 1-week boot camp and then turn around based on that information to make $1 million the next day trading. That's not how trading works. Those expectations are unrealistic. But by approaching the market with solid, sound foundational knowledge, it'll make all the potential difference, in my opinion, with how your career goes as a trader. So it should be great. Again, the boot camp or separately, if you want to become a professional trader with me, reach out and you'll get access to all of my training. Cool. What else? I don't know the answer to that direct. So the question is, percentage-wise, how much are you short versus long right now? And I really don't know the exact number, but I would probably say I'm, again, this is a guesstimate, 85 to 90% short right now, something like that. I'm really pretty decently heavy in one of those bearish 3 times leveraged ETFs, but I'm not as heavy as I was when the market had that island top. I'm pretty sure. I was heavier to the short side then. I have less conviction now. So each day that we don't break down, I'm actually piecing out. I'm staying net short while we're beneath that resistance level. But each day we're not breaking down, I've been piecing out of a little bit of it into the close and just kind of lightening up in general. How do things work if we want to take your course but you're Canadian? So you can take the course, you can take the boot camp for sure and be anywhere in the world. Anything T3 Live related, you can be in the VTF room, you can get the subscription to that. If you're anywhere in the world, you can take the boot camp if you're anywhere in the world. The only thing that you cannot do if you're residing outside of the United States is actually open up a trading account with us. But anything else you can still get access to. So you can just reach out to myself and I'll provide the information to the team at T3 Live. Or you can reach out to the T3 Live team if you already have like a counselor there or a salesperson at T3 Live and they can help you out. Cool. Any other questions today? It's been a little over half hour. I'm dying to get back to my trading, but happy to spend an extra couple minutes answering any other questions. Otherwise, it looks like we're starting to wrap up. Okay. That's going to do it then for today, since there's no other questions. Again, feel free to reach out to me directly, and either myself or a member of my team will get back to you. And I'm going to get back to this market because it's been an exciting day. I've traded very actively today, and I've got some positions on right now that I really want to be managing. So have a good one, guys.